just like any business, you could fail as a bank in any state. History matters, money and banking. Now, this is a very amazing subject, especially when it comes to the Constitution and how things should have been set up. As you read into both of these men's backgrounds, you have to understand they're imperfect individuals and they have much good and a few wayward concepts on both sides. Hamilton, he grew up with a business background, actually grew up in the Caribbean. At a very early age, learned bookkeeping and accounting and the merchant capabilities and was a businessman, very forward thinking. He was kind of the millennial of his time, especially even in Washington's cabinet, which he had great influence. As a young man, he wanted to go out and make a name and go into battle and do all sorts of things, and he became a part of Washington's camp. He was one of his aides. Washington was a mentor to him. There was about 20 years difference between them. And Washington got to know him real well, and consequently, in Washington's first cabinet, he chose Hamilton. Jefferson did many great things, was one of the founding fathers, was an intellect. There's a comment of all the great minds dining in Washington at the White House, and they were all encompassed within Jefferson as the individual, probably one of the most greatest intellects of the time. He was very studious, but did not have a background in merchant or commercial. He ran a plantation, but didn't really touch a lot of what happened in the business. So these are two totally different men coming from two totally different backgrounds. Hamilton believed in private banking and strong government. He was very much a proponent for federalism. Jefferson, on the other hand, he understood the concept and how important it was to have federal control, but he believed that the people needed to have more of a hand in it. So when it came to the concept of money and banking, you could not find two more diametrically opposed people. And this is the source of everything that came forward in our country. And these two individuals represent those two views. Now, I'm not going to make a statement one way or the other, because as you study both of these views, you see the advantages and you see the flaws. And as we've talked about before, when you introduce human nature into these two situations, you see how problems arise. And problems did arise. We have had three national banks. Now, in the very beginning, from 1791 to 1811, we had the first bank of the United States. Hamilton convinced Washington, convinced Congress that we needed to have a bank to handle our funds. His view was that banks had the capability, they had the process, they had the learning, the experience to be able to handle the money so that the United States could pay off its debts, could create an economy that was structured, and could move forward and help business in the country. And that went on until 1811. Well, interestingly enough, what happened in 1812? England invaded. Now, in 1812, the reason that bank went away is because who became president next? Jefferson. And so at some point in the future, that bank went away because there was another thought, another idea that the federal government needed to do its own banking, needed to issue its own coin, etc. 1812 comes along, we have a war, things go sideways. By the time we get to 1815, the government realizes, things got really screwed up without a bank. We'd better have a bank. So in 1816, along comes the second bank of the United States. Things get put together, the war debt gets paid off, a little bit more organization, a little bit more structure. And that goes on until Andrew Jackson. Andrew Jackson was a Jeffersonian. He felt the same way that Jefferson did. Right after that, in 1841, we lose the banking system. We go back to what it was before. From that period until 1913, we have no central bank. We have the Civil War. We have a number of stock failures. We have a lot of banks. In essence, we have chaos throughout the banking system. What would happen is that just like any business, you could start a bank in a state. And just like any business, you could fail as a bank in any state. We have history in Ohio, Kirkland, and other places where banks failed. And why did they fail? Well, some of it was the weakness of the men and those individuals running the bank, and the egos, the greed, and other things. And some of it was just not knowing, not understanding the banking system. So chaos was the word. We had another major failure in 1907. That prompted the governments to start looking again. We need to have more structure. We need to have a group that understands the banking system and makes it happen. Now, there are lots of books that have come out about the Fed. I don't want to argue those points for or against the Fed at this point. I think it's important for everyone to read themselves and understand. But also understand that no matter what system got put in place, again, you have human beings involved in that, and it creates some of the chaos that we've had. The one thing I can say is that with the Fed, we have had structure, and it has allowed the country to move forward. Some of those policies have been good, some of them have been really terrible. The way the Fed works is it's a very complex system of governors and boards. 7 members of the Board of Governors are appointed by the President of the United States and they're confirmed by the Senate, much like cabinet positions. But in each of the 12 districts, the Reserve Bank presidents, they are basically gleaned from the banks of each of those regions. So it is a combination of a government-run and a private-run operation. They have striven to try and keep the Fed as combined and unconvoluted as possible so that you don't have too much power in too many hands. But it still comes out to there's a lot of influence, and the Fed really does create a lot of power and can move our economy. Rightly so in some respects, because the Fed's main reason for being is to try and keep inflation in check and to try and keep our economy moving along without too many problems. But the banking system is really important to this country because as the banking system goes, so goes our economy and so goes our capability of whether or not we become a fruitful country or a depressed country. Through the 30s, we saw a lot of the problems because of depression. There have been stories. Milton Friedman did not necessarily like the Fed during the 30s because he believed that the Fed had undue influence through a lot of these banking groups to get rid of some of the small banks. We saw in the 80s the savings and loans, the system there. Rightly so, some savings and loans were not well managed, and the savings and loan business went out of existence. But we have the Fed as the only governing engine to keep our economy running. Here's a problem with money. Because of the way the government works, the revenue is collected, and this is an example for Texas. You see where the revenue comes in from individual income, Social Security, social insurance, other taxes, etc. But our big issue is that over time, those federal funds have been pushed back into the states. And many states now are basically debtors to the federal government. And this is why, and it's been done on purpose through Congress, to be able to control a lot of states. We've always seen this push-pull between state government and federal government. And one of the ways you can control the state government, if you don't have the political power, is you have the power of the money, the power of the purse. And now we have a lot of states where a large portion of their budget, in this case, well over a third of the Texas budget, is federal funds. And you'll find that in many states, even here in Utah. a large portion of our federal budget, our state budget, is from federal funds. And that is a way of controlling the state to a great degree. Over time, this has varied from 26% to well over 30% of a state's total budget. That's something we need to be aware of at each state level, is because that takes away our ability to control our own states. We'll talk in the future about lands, but the lands in the West reflect a lot of this issue, where the federal government has undue influence and undue control over our state lands and our state budgets. In Utah, it's pushing out, I think, almost half of our budget, and yet 70+% of our land we don't own. And so we need to be very cognizant about how that's going to affect us, because money is all about absolute power. Power in the ballot box is one thing, but if you don't have the budgetary power and you don't have the power of the money, then the ballot box is kind of a moot point. And so we need to be very cognizant about how much money the federal government is using to control us. The other thing that's happening in the future is cyber banking. Now, this is a wild card, and nobody knows how this is going to change things, because cyber banking takes the entire concept of the Fed and takes it out of the hands of governments. And many governments around the world are very afraid of this, because it goes back to absolute power and control. If a state has its own account, then all of those monies are being transferred and handled totally in a different way than the Fed. What do? How do you exercise control? Up to this point, the Fed is basically the bank for the federal government, which in many ways makes it the bank for all the states too. Now with cyber, it becomes very different. So our future in cyber currency is going to change our political future, and it's going to make things a lot different. So, history matters in your life.